Nigeria's latest inflation figure at a worrying 10-year high of 16.5% and its currency coming under severe pressure. The entire business community had turned to the direction of the country's central bank's Monetary Policy Committee to see how it would respond. And that response came after the committee met for several hours on Tuesday in the nation's capital, with CBN Governor Godwin Emefiele emerging to announce a 2% increase in monetary policy rate.
If we favor price stability at this time, in which case signal an interest rate movement that will curtail inflation, that when we curtail inflation, a lot more stakeholders' interests would have been sort of met, thereby encouraging, in this case, inflow of capital into the country. And as you have more inflow of foreign exchange into the country, what that does is that it deepens the FX supply base.
The decision has been received with quite a surprise, and despite the explanation put forward by the central bank governor, analysts say raising MPR would mean commercial banks jacking up their lending rates as well.
Today, the manufacturing sector is finding it difficult to access FX. They are also going to find it difficult to access funding. And with the review in monetary policy, they're going to find it far more difficult to access funding. And the manufacturing sector has already declined the first quarter of the year, likely going to decline the second quarter of the year. Now, if you deny them further funding and deny them access, they don't have access to FX. So what do you think will happen?
It's still uncertain whether this decision would have the needed impact on inflation and improve the supply of foreign exchange. But the Monetary Policy Committee also made it clear that more action is needed on the side of fiscal policy for the country to bounce back on the path of growth, and that the government needs to speed up the implementation of the 2016 budget.
We think the strongest reason, even if they are not making it seem like that, for the Apex Bank or the MPC to raise MPR is, first of all, exchange rate stability. And that's external price stability. But that has a way of trickling down to domestic price stability, which is what we popularly refer to as inflation rate. A more stable exchange rate is good for domestic prices if your economy is largely import dependent.
The forex market has so far not responded positively to the decision. The Nigerian naira weakened further on Wednesday, falling to an all-time low of 334.50 against the dollar on the official interbank market. Deji, Badmus, CCTV, Lagos, Nigeria.